Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of monthly demand and support and rejecting it to the upside. In fact, from here, all this previous rejection to the downside was created. The market then broke above that zone, and all that previous resistance was turned support at this area, and the market has already started rejecting the level to the upside. So from a monthly standpoint, everything seems quite bullish, and we could expect more potential bullish continuation to be created away from this level. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can notice how, first of all, the market had created this W formation. In general, after the creation of a W, you would expect first a correction and then more bullish continuation. The market has already created a correction. Currently, we're seeing the continuation to the upside. So there is the possibility to see more bullish price action potentially breaking above the previous high that we have here on the weekly time frame for this pair. We can also notice that from a pattern standpoint, as we have this impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. And we can see how this correction didn't even reach the 0.32 of the Fibonacci taken on the impulse leg. So it was a very short-lived correction, and then immediately buyers jumped back in, pushing the price higher. So buyers at the moment seem very strong. Dropping down the daily time frame, what do we see? Now, from a daily perspective, I did speak about USDJPY a couple of times in the past. I spoke about it when the market was around this area, explained all the reasons for which we could expect this move lower, and then from here I made another breakdown explaining all the reasons for which we could expect a move higher. And after this impulse and correction, I explained all the reasons for which we could expect the impulse, correction, and continuation to the upside to be created if the market would have broken above the previous high. And by the way, I will link in description all those previous analysis so you can go and check them out for more free education. Now, here on the daily time frame, we can notice how the market has now created yet another daily higher high, therefore broken another structural level, exactly this level here, which is previous daily resistance from which this move to the downside was created, which has now turned support at this zone. Now, as the market has created this impulse, if we will now correct into this area and we want to measure that correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements all lining up exactly inside of this area, therefore creating confluence of support inside of this zone that if the market will go and test it, we could definitely expect this market to potentially reject this zone to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, we can see how with the last reports, net positions have been decreased. We went in fact from having minus 55.5k net positions down to having minus 84.2k net positions, therefore showing a decrease of net positions, making the JPY weaker. And if institutions are shorting the JPY, this makes USDJPY stronger, because a shortening JPY makes USDJPY stronger. Therefore, if the market will go and correct this confluence of support, there is good probability of seeing more institutional longing, actually in this case, shorting of the JPY instead of this area, which would mean longing of USDJPY on the institutional side of the market, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So before I forget, by the way, make sure that you join my free Telegram channel where I share all my updates and new posts. So make sure you go and join. The link is in description so you never miss new updates. Now, as I was saying, and continuing with this analysis, if the market will go and test this area, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional standpoint. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised if from here we get a rejection to the upside, potentially completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.